beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Kospi is trading with gains of around 1%.
I agreed to move it. I believe July 9th would be the date.
Resistance for the Nifty is 25,116.
Both FTSE as well as MSCI have gone ahead and announced weight reduction in the indices for eternal.
About 0.25% higher on the Nifty, 24,900.
Any weakness in the dollar will prompt money shifting out of the United States and going offshore.
We believe we have strong grounds for availing all legal remedies available to us.
Post-IPO, the net debt position of the company, gross debt minus cash, will be close to zero.
The Nifty is inching towards that 25,000 mark. It's 125 points up at 11 o'clock on the Nifty.
We expect the monsoon to slow down after the initial onset.
PSU banks have reported their highest ever quarterly profits.
Supreme Court has directed and has said that now for the status quo for liquidation proceedings in the NCLT.
What we're essentially seeing today is a very strong buying activity. Cooled off a little bit in the last hour or so, but still very much in the game. Yeah.
Well, that is the day so far, and it is a decent day off the highs of the session, but 130 solid points on the index. Lots of single stocks, very, very stock-specific market, actually, and that's going to be the focus here over the next 60 minutes. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Rima with me in the studios, and Nigel is joining in from the newsroom floor. Guys, good afternoon.
Hi, good afternoon, folks. I guess a green day. But we're not alone. I mean, it's a nice green day pretty much across the world, barring the Hong Kong market today. Most of the other markets, Europe right now is surging, relief rally, because at 50% tariff threat, at least it's been pushed back to some extent. So it's a risk-on kind of a day globally as well.
Indeed, I think the CAC is out 1.25%. The DAX is higher by 1.8%. The FTSE, that's the UK market, is shut on account of a public holiday, and US is shut closed today on account of Memorial Day. But rest of Europe firmly higher now.
What does it say when the mice have fun when the cat is away or something, right? What is it?
Yeah. The mice are at play when the cat is away. Which is the US market, just in case you're wondering what is it we're going on and on about. US market is shut for the Memorial Day holiday today. Hi, Nigel.
Well, that's right. Just concentrate on the market for the next 60 minutes and then focus on getting home, because it's going to be quite interesting as well, going by the weather forecast as of now. I believe it stopped raining for around half hour or so. But it's back. So, guys, let's get straight to the market action, and post the 60 minutes, then we can find our way home. Let's get started on the show, though. We have Rahul Sharma, who joins in, of JM Financial. Hi, Rahul. Good afternoon. Good to see you in. It'll be interesting to see what kind of institutional participation we're going to have by the end of today, Rahul, because, as we mentioned, the US and the UK markets, both of them are shut. That said, it's been a pretty good trading session. What's the trade on the Nifty, and what is the level you're looking for a bit of a breakout from here on? 25,000 what?
Yeah, very good afternoon. So for a change, we are actually a bit optimistic around this 25,000, 25,100 mark. Last week, we've seen increase in short positions by FIs in index futures. We've seen them going net short in the cash segment as well, around 10,000 odd crores being sold, around 50,000 contracts short on the index futures. Plus retail has 5x their positions on the long side in index futures. So all this is summing up to a situation where there might be a brief period of volatility just before the monthly expiry happens. So we are maintaining a cautious stance unless and until Nifty decisively does not take out 25, 100, 120 is the resistance area. Unless and until that level is not taken out, we expect the Nifty to be range bound or a bit of volatility, something that can that is very much possible. Like you said, I think this is a very stock specific market. There are pieces segments in the market which are doing good. Two ideas for today's session. One is on the real estate pack. Godrej Properties looks pretty solid. The stock has formed a formidable base around this 2,000, 2,200 area. and now seems like it is ready to shift gears. So reality index being positive, Godrej Industry is expected to head all the way up to 2,500, 2,600, possibly in the next series, and can be bought at these levels. Second stock which looks good is Hudco. This stock has given a big breakout, or rather it is on the verge of a big breakout at 243, which is the April high. So 243, 244 is where we expect major short covering to come into the stock. And overall, we feel that the stock can head towards 280 to 300 on the upside. So Hudco and Godrej Properties are our top two picks for today's session. And overall Nifty, I think it's better to be cautious, or rather stay hedged, because some bit of volatility is something that we are expecting as a team.
Okay, all right, got that, Rahul. Thank you very much for the calls. We'll come back to you after a little bit. By the way, just to talk about the market, I mean, there's a 0.5% gain across the Nifty. Mid-cap index is doing slightly better, gain of about 0.6%. The Bank Nifty is the one that's been slightly disappointing because it started the morning with a flourish, but then it's kind of not been able to hold on to those highs. That's what I'm talking about. That's the Nifty Bank. But today is a day of really outsized stock-specific moves. And I'll just give you some examples. We'll be talking about a lot of these stocks as we go along. BEML, and we spoke with the management as well. Right now, it's clocking gain of 13%. BEML after the fourth quarter outlook, and of course what they've said about the current financial year as well. Phenolics Industries, another result reaction, 8% higher. GNFC, Anupam Rasayan, these are all positive result reactions playing out. GE, Vernova, TND. I mean, today is a day where a lot of mid-caps, and this is the fag end of the earnings season, the typical pattern is that you have all the tail enders coming in with bad numbers, but this earnings season is turning out to be different. You've got some, look at that, I mean, 10% circuit right from the time the market opened today, and that continues on a GE, Vernova as well. So, keeping in the spirit, keeping in with the tradition of some good mid-cap earnings, let's look at RateGain as well. Stocks up almost 5%. It's cooled off from the peak, but nonetheless, it seems to be a good quarter. Rima, what did you make of it?
Well, it's an okay quarter in line with expectations. Now, RateGain, just to put it in context, began the year with a 20% revenue growth. It moderated it to 15%, and then last quarter it said revenue growth will be 12 to 13% for the full year. So that's, the revenue guidance for the year. The company achieved the lowered revenue guidance. They ended FY25 with a top line growth of 12.5%. But Q4 was muted. I mean, it's met the guidance. The company was expecting a weak performance in Q2 on account of delayed deal wins. So Q4 revenue growth was just about 2% on a year-on-year basis. What the street liked is the margin performance. EBITDA margins went up by 120 basis points and has come in at 23.2%. And the picture, or the annual margin picture, is actually a more telling story. In FY21, the margins of the company were 2.5%. FY22, 8.3%, expanded to 15%, then further to about 20%, and FY25 margins were at 21.5%. So this year, while the top line growth was nothing to write home about, just 12.5%, the margin expansion story is strong. And second positive thing is the cash in the books. We don't have the updated cash. The conference call is at 5 p.m. today, but as of Q3, the cash in the books was close to about 1,200 crore rupees. And plus, remember, the stock is corrected. I think year to date, RateGain share price is down close to about 27, 28%. So it's also gotten beaten down as the company kept moderating its top line guidance. But today it's bounced back. Strong margin performance is what the street likes. Dipan Mehta is now with us on the show. Dipan, is RateGain a stock that you've looked at? And your thoughts on the Q4 numbers? And in the conference call, what is it that you would look for?
Hey, Rima, good afternoon, and thank you for having me on your show. If I would show you my screen, it is there on my watch list over here. And I really miss that stock because we love such platform companies and we love the travel space as well, but always thought it was very expensive. And now the numbers have come through and management has sounded very positive. There was a period in between where there was some concern around a large client moving away from the company, or there were some delays in revenue booking, but I think those seem to have been resolved. And maybe at a correction, this is the stock which is on top of my list in terms of acquiring, because it's a great business, very easily scalable, and they keep on adding new clients. And within the travel space also, they are focused more on small hotels and on smaller travel operators who really need the services of RateGain in order to grow their business.
So Dipan, in April, the stock was available at what? 410, 420. That's a good, 20% lower than the current market price. So that 400 level was also not attractive for you?
Yeah, there was that uncertainty around their revenue growth at that point of time. I don't recollect the exact reason, but there was some issue with one of their largest clients. it had moved away the contract from RateGain. So that's something that was a kind of a red flag at that point of time. And the management was guiding towards slower growth. But I think those seem to have got resolved, which is apparent from the way the results have come and the way the stock price has gone up.
Did they give a guidance, Rima, this time?
No, the conference call is at 5 p.m. So perhaps in the conference call we'll get
Because if you remember, that was the problem, right? They used to say 60-70% type of growth.
It was also including the Adara acquisition.
The acquisition.
That they had done. So last year growth was very strong.
Yeah.
The acquisition. This year, they began the year with 20%, brought it to 15%, and lowered it to 12 to 13%, which they achieved.
But yeah, growth rates have fallen quite a bit. Yeah. And I think they've also raised money. They're sitting on cash, but they've not made that acquisition.
Because they've always
for about
said,
a year and a half.
Yeah, the cash as of Q3 was 1,200 crore rupees. And at that time, when asked, they said that we're looking actively, but all the companies are very expensive. Yeah. So, and you're right, just going back to the growth numbers, FY24 top line growth 69%, FY23 54%, FY22 was 46%, but then there were these acquisitions also which boosted. But things slowed down in FY25.
Okay, all right, that is RateGain, got that. Let's move on. Another stock in focus. Edelweiss is in focus. Sources are now telling us that the company could be looking at selling 25 to 30% stake in its mutual fund business. And apparently it's in talks with a number of asset management companies as well for this. Yash is joining in with exclusive details. Yash, what exactly are you picking up?
Well, Surabhi, so there are two parts in terms of updates that we've picked up from our sources. First is with respect to the mutual fund business. What we've been given to understand is that Edelweiss Financial Services is looking to sell about 25 to 30% stake as far as its mutual fund arm is concerned. Now, the names to which the company has been talking to with respect to the sale of this particular stake makes this transaction very, very interesting. They've been speaking to large mutual fund houses based out of the US. These include Fidelity, Capital Group, Northern Trust, State Street Global, as well as Legal & General. As far as, its equity AUM for Edelweiss Mutual Fund is concerned, a fairly large size, about 70,000 crore rupees out of the total AUM of about 1.5 lakh crore rupees. So that is the first part of the transaction. The second part that we've been given to understand is with respect to the entity called EAAA or Edelweiss Alternative Asset Advisors. Remember, the company had filed its DRHP papers with SEBI last December. This was returned in March because there was some accounting difference with SEBI wanted to see in the papers. The company is expected to refile its DRHP papers by the end of next month itself, that is June end, and launch the IPO by December. Edelweiss Alternative Advisors, as I said, first filed the papers in December, and now, of course, it was returned back in March. The company and the IPO will be a complete OFS, which means Edelweiss Securities and Investments, which is a wholly owned subsidiary of the listed Edelweiss Financial Services, will be raising about 1,500 crore rupees as far as this particular IPO is concerned.
Just for clarity, Yash, how much stake does Edelweiss? I mean, it's a 100% owned business, or are there other partners as well? You're saying they're looking to sell up to 30%, right?
Correct. So, of course, there are different, it's a 100% owned business, but there are different schemes where there are different owners. So the shareholding is a little blurred in terms of the mutual fund business with respect to the direct holding of Edelweiss Financial Services. But as far as the EAAA business is concerned, there it is 100% holding by Edelweiss Securities and Investments, which again is a 100% subsidiary of Edelweiss Financial Services.
Okay, all right, got that. Thank you very much for that, Yash. So Edelweiss also in focus. By the way, by the time we were talking about the Edelweiss numbers, look at what's happened to Gillette. And what numbers from Gillette? That's what I was saying. Today is such a day where you've got amazing, positive, pleasant surprises on the earnings front. Look at that stock. My goodness, it's like the Burj Khalifa there. Almost 12% higher. The EBITDA line has ballooned. I mean, the margin, I think we'll get the flashes up if we can. The margin has gone up from the early 20s to 29%, if I quickly cut the flash correctly. Deepan, come in on this. It's such a pleasant surprise, right? Earnings season in its last lap, and then you get these positive surprises, whether it is, like I was saying, GNFC, Gillette. People seem to be really liking BEML's commentary as well. What do you make of it? Any of the weekend earnings that really stood out for you? Maybe a word on Gillette, if you've had a look at it recently.
Well, I think Gillette seems to be an outlier because the entire FMCG pack was a very big disappointment. So one needs to go a bit deeper whether something has changed structurally in the company because of which we are seeing these kind of numbers, or is just something which is a one-off that we need to see. But broadly, I think that this old phobia we had that towards the end of the earnings season all the disappointments come, that seems to have been at least addressed in this particular earnings season. But nonetheless, I think it's been a mixed set of earnings season, and very disappointed with the banks and BFCs and some of the software companies as well, and even within cement pack where we were bullish. So I think that we exit this earnings season with fewer ideas than we thought we would enter in with. But nonetheless, I think it's stable. And let's see going ahead how these tax cuts and lower interest rates, how they pan out. And of course, a great monsoon also is underway.
Okay, all right, Deepan, stay on. Let's address JSW Steel. The stock is higher in trade because there was some relief that did come in there, but the relief could be temporary in nature. Ashmit joins us to break this piece of news for us. Ashmit?
Well, what we understand is that clearly there's a big relief that's come as far as JSW Steel is concerned. What we're given to understand is that the Supreme Court, in very clear terms, has directed for a sense of status quo, no liquidation as far as Bhushan Power and Steel is concerned. That's the core concern that had been raised by the COC, that had been raised by JSW Steel. Now, bear in mind that former promoter Sanjay Singhal had moved the NCLT and had sought for an expeditious liquidation of Bhushan Power and Steel. Now, what JSW Steel, as well as the COC, when appearing before the Supreme Court, told the highest court is that, look, there is still some time left as far as filing of the review is concerned, that if liquidation takes place, that will leave JSW, that will leave the COC high and dry, that the COC themselves are facing questions of how this return, if the Supreme Court order is to be complied with, how the return of funds is to work, how the return of securities from JSW back to the lenders will work, what legal options there are before the lenders, before the JSW. And these were questions basis which the Supreme Court said that in the interest of justice, it's best advised that at this point status quo is maintained. There is no further movement, there is no liquidation that takes place, and that is the best way to ensure that if and when the review is filed, there will not be any further liquidation. Having said that, speaking of a review, the Supreme Court, as a part of its order, does record indicating that both JSW Steel as well as the COC are contemplating relief measures like filing of a review petition. Just a small caveat there. As per the Supreme Court rules, there's a 30-day window for filing of review petitions. Given that this judgment came on 2nd of May, the 2nd of June naturally would translate into a deadline, a 30-day deadline. So that's the window that JSW Steel and the lenders are looking at in terms of filing of a review petition. But for now, status quo, no liquidation to happen as far as Bhushan Power and Steel is concerned.
All right, thanks a lot for that, Ashmit. For the time being, status quo. So JSW Steel continues to own and operate the asset. So for the time being, it's good news. And all eyes on the review that they'll be seeking by June 2nd itself. So that's all the details that are coming in there. Deepan, what's your view? JSW Steel, Tata Steel, all of the majors, they have indicated that Q1 will be an improved performance. Is it already baked into the price? JSW Steel, when this negative news came out, the stock was ballpark around 1,000 rupees. And now, though things are still not very, very clear, it's actually recovered all of those losses that we saw on the day of that liquidation verdict. Your take?
See, Nigel, as soon as the steel company result comes, the first thing I see is the volume growth. The volume growth is really quite stagnant when it comes to all the steel companies in the listed space. And that's a bit disappointing. And that's one of the reasons why we don't look at steel companies per se in positive light in terms of investment. So I would like to avoid all the steel companies. And the valuations are also very expensive. Even if you consider historical basis, they are trading at expensive valuations. And it's not that earlier the thought process was as soon as they set up the new steel plant, the profits will start to roll in for the company. That's not happening because per se volumes are stagnant. And then this entire threat is there of imports and tariffs and so on and so forth. And it's a very internationally traded product, so that affects domestic prices as well. So when I look at the full picture, it's something which is an avoid for me. We are better off buying the steel consumers than the steel makers.
Deepan, hi, afternoon. Have you tracked a stock or a company called Share India, which is, I think, Gurgaon based? Do you track it? Have a view?
I know the management very well, so wouldn't want to comment on it. But it's a typical stockbroking company getting into a lot of other wealth management and related businesses. But the core revenues do come from options trading, which is what I understand. And I think that's the reason why its performance gets impacted by the actual options volume traded in the exchanges. But beyond that, I wouldn't want to comment.
They do prop as well on their own books. I mean, I'm just thinking, I don't know if you must have seen that story, Jane Street's $2 billion haul last year.
Yeah, absolutely. I had to read the story twice, Prashant. They made $20 billion in options trading Jane Street, of which $2 billion came from India.
Yeah.
That's really, I mean, in a way, it's disappointing because here all the local traders are making loss after loss, and there's this foreign company which has taken $2 billion out from the country as profits for them. So it doesn't feel right. But look, it's a capitalistic society, and I think they have done everything which is as per the rules of the land. So, but it's not the right, I would say, right signal or trend for the capital market where such a huge foreign proprietary trader makes such huge gains at the expense of Indian traders.
Well, zero sum, right? As they say, Deepan, right? And markets, somebody's loss is somebody's gain. It's a story. It's incredible, actually, over the last couple of years, what they've managed to do. Of course, points taken on, and of course, I mean, a lot of, as of now, of course, there's nothing to say, well, they're doing this wrong or that wrong, although there are always murmurs and chatter and all of that, but I don't think we should sort of go down into that. But the point is, they've done exceedingly well. It's not just that. The Citadels, the Jump, all these guys it's a big market now, the options market here in India. Deepan, thank you very much for joining us.
Prashant, is this transfer of profit from India, from Indian traders to these highly sophisticated algo high-frequency traders. I think, what can one say? They are permitted to do it, so they are doing it. And Indian traders are at an unfair advantage as compared to these people. I have heard stories that they invest in servers which run into lakhs of rupees, and they have so much of space at the co-location data centers of the exchanges. And it's not an equal fight, as I understand, but those are my personal views.
No, it is not an equal fight. I mean, there's no fight. It's you're talking about highly sophisticated systems, etc. Actually, Deepan, and for our viewers as well, those who there's, if you remember, there's FTX, the exchange, which was run by Sam Bankman-Friedman. There was a book about FTX which was written by Michael Lewis. Now, that book, of course, was spanned because Michael Lewis came out in support of Sam Bankman-Friedman, who, of course, was committed a fair bit of fraud. But the interesting part of that book is there are a few pages devoted to how these, how the Janes of the world work, because they're highly secretive. But there are a few pages in the book which describe, I guess, inadvertently, the strategies they use, etc. So it's quite actually fascinating. But that's we can maybe go into the details at another time. Thank you very much, Deepan, for joining us. Great to have you with us here. Appreciate it, as always. 130 points on the Nifty, 24,985. We'll take a quick commercial break here. We're going to come back with Rajesh Kothari on the other side.
We get from all this?
Welcome back. You got the market, which is up 140 points, 24,000, actually 25,000. Let's round it off. It is at 25,000. Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. And this is Rajesh's kind of market, very, very stock specific. And for the discerning investor. Rajesh, good afternoon. Good to have you back. So since the last time we spoke, Rajesh, tell us a little bit about what has been on your radar, what have you done? Stocks have all come back in a powerful way. Tell us.
I think, like last time we discussed at length that, whenever there is uncertainty, that's the time correction happens. And whenever such correction happens, take it with two hands. Don't worry too much about macros because macros keep changing. And you have seen, in fact, the good things, whatever has been happening in last 3-4 months in Indian economy in specific, I think are getting ignored because of Donald Trump tariff tantrum and of course India-Pakistan. These two things actually grab the headlines. And all the good things which was happening simultaneously in the economy, they were actually not talked about. So inflation is coming down, interest rates are coming down, RBI is taking all the necessary steps to improve the liquidity in the system. I think everybody forgot Finance Minister gift, the tax cut, which will likely to boost consumption from second half onwards. And all these things put together, simultaneously there is some time correction and there is some price correction, making valuation kind of a reasonable. Of course, it is not cheap, but at the same time, it is not too expensive. And that's, I think, a very good setup for the market to do well over next 12, 18, 24 months. One important thing from the result season, if you look at the BSE 500, I think except probably 40, 50 companies, most companies have announced their results, and the results have been quite satisfactory. The EBITDA growth is now double digit in the fourth quarter. If you exclude the oil and gas and metals, because that's the right way to look at it, to compare the underlying strength of economy. And that is 13, 14, 15%. And I think that's a very, very, very good number. As we move into 1Q and then more importantly from second quarter, I think the Nifty earnings growth will also turn double digit because of the base effect, number one, and number two, overall improvement in economy. So net, I think the market looks reasonably good. And if anybody who has a 2-3 years view, I think it is a good, decent money to be made in the market.
Rajesh, that's the top-down outlook on India and India's macros. What about individual ideas? What is it that you like? And incrementally, have any new trends emerged, say in the last 1 or 2 months, say from the earnings, any interesting ideas that have propped up that you're investing in?
Well, what typically we do is that we a little bit try to do 6 months ahead of time, correct? So whatever numbers now getting announced, which are good, probably that's what we have been looking for from last 6-8 months. And today, if you ask me what we are looking for is that where do we see the incremental growth 6 months down the line, correct? Like, for example, if you remember, last 18-24 months, we have been talking about capital goods companies. We have been talking about a power grid capex. We have been talking about a capex into the HVDC technology. And look at the 2-3 companies. There are only 2 companies in this HVDC space. And of course, one company what we own is Hitachi Energy. Please put a disclaimer. And this company, look at the order book, look at their execution, look at the revenue growth. It has been a super duper kind of numbers. So now what we need to look at is incrementally from here, how do we see the new trends emerging in the sectors?
So tell us about that.
2-3 quarters for those companies to get reflected, but that's where you make a bigger alpha. As far as management commentary goes, I think across various sectors, there are winners and there are losers, and I can go on and on, but I think there are a few winners in the capital goods space, which we continue to like. I already talked about 1 or 2 names. Same thing is probably going to happen in the consumer space, where right now it's a little bit slow, but as we move into September quarter, you will see consumer trends also to improve, particularly on the discretionary side. And we hold here one or two very large companies in the consumer discretionary space. And same thing, I believe, is going to happen in pharma, because currently people are a little bit skeptical, too much of noise on US tariff. But as and when that noise gets over, I think the pharma will again probably come back, because the growth is going to be very strong in a few pockets within pharma, not the entire pharma space, but the few pockets within pharma.
Okay, so pharma is something that you're looking at. Rajesh, hi, good to have you on. I must talk to you about defense, right? Because the last couple of months, especially the last 6-7 odd weeks, for obvious reasons, the sector has definitely come back on the limelight in a big way. Today we were talking to BEML, and that stock also, they're looking at building up the defense exposure. We know that stock's up 12 to 13% right now. But what is your assessment and your approach given the huge run-up in stock prices? The question is, yes, the order book opportunity could be good, but is it all substantially already captured in the stock price, or can someone still take a 2-3 year view and hope to make money here?
Well, frankly speaking, if you ask me, then it is a part of my stocks missed in last 3 months. That's what figures, because that figures are because we have not adequate exposure to this entire space in general. But I think what we look forward is the more sustainable kind of a thing, rather than narratives. Ultimately, what we need to look at the numbers. And that's why there is always a gap between, narratives and numbers. And as you rightly say, what the valuations are already factored into. So we have very selective exposure to 1 or 2 names within this entire defense theme. But, no regrets if you ask me, because we are holding few companies which have a much stronger visibility compared to defense. and much stronger business moat compared to defense. And of course, the best of the customers, no working capital issues and no receivable issues, unlike many defense companies. Please understand, the defense, it takes 10-12 years for any approval, So
absolutely. It's a long gestation period. It can be lumpy. Absolutely. So let me ask you to play the manufacturing theme, engineering or manufacturing, or basically, the whole capex cycle theme. If not defense, how else? What are the micro sectors or the sub pockets? How are you playing it?
So one category is HVDC technology, and we've been talking for that for last almost 2 years. You know the name of company what we own, Hitachi Energy, is one of our largest holding in that. The second space to look for is the pump segment. Now, for example, the nuclear power is going to be a very big opportunity. And there is only probably, I think, in my view, there is only one company which is an approval to supply the nuclear power plant. It's a multinational company. We like that space. Very good company, debt-free balance sheet. So that's second category. Third category is the compressors. And as the capex goes up across the various sub-segments, be it a mining, be it a defense, be it a steel, or across various subcategories, the compressor category also can do significantly better. And the fourth space is the EMS space. And this entire manufacturing, be it a Apple doing outsourcing or Vivo is doing outsourcing, whichever name you want to talk about, the overall EMS space will also get a tremendous benefit out of this. So these are the 3-4 sub-pockets within the capex theme on which we are bullish on from quite some time.
Rajesh, with full disclosure, why don't you tell us those 3-4 those names specifically? Full disclosure, just to for our viewers, if you're comfortable.
Yeah. So in pumps we own KSP Pumps. That's the company what we own. In compressor we like Kirloskar Pneumatic, and EMS space we own 2-3 names, all market leaders companies, starting from Dixon to even Avalon and Sirmas of the world. So that's basically, the overall capex theme. But kindly please put disclaimer. I repeat, we own these companies for our clients, across the PMS plants.
No, absolutely, and I think it's a clear, absolutely clear disclaimer, no doubt about it. The nuclear one that you were talking about, MNC company, which one was that?
There's a company called KSP Pumps.
Okay.
Yeah, KSP Pump. This is a company which is a German subsidiary and one of the largest company in KSP. I think the third largest in the pump category, and very high-end technology. That's their moat. So they don't do too much of solar pump and all that stuff, but they do more of a critical technology where technology and applications are getting more.
Rajesh, you also spoke about one or two large consumer discretionary plays and how pharma may make a comeback. What would your stock holdings be with the disclosure?
So in consumer discretionary space, we own Trent. Trent has been our largest holding from last 3.5-4 years. And I think the company is doing exceedingly well in terms of even the quarterly results. If you look at it, I think that they have done extremely well compared to any other retail category, or forget retail, even the FMCG, non-FMCG, discretionary. If you put the entire growth, then it's the fastest growing company in that entire universe. So that's one company what we continue to like. And there are another 2-3 companies which we are still adding to our portfolio. So I would not like to disclose at this point of time. But it's an interesting discretionary spend on which we are playing, because we believe that the tax gift will boost the consumption from second half onwards, and that can lead to improvement in the overall discretionary space.
All right, Rajesh, we'll leave it there. Thank you very much for joining us. It's a pleasure and good conversation. Actually, great conversation, as always. Thank you. Well, I think we're up 150 points, 25,000 on the dot, as we, I think, hit the 3 p.m. mark now. 30 minutes to go for close. We'll take a quick commercial break here. D-Street chatter with Nimish coming up in terms of what he's picking up. That's lined up next. And, of course, we'll go back to our technical analysts for some short-term trading ideas as well. Stay tuned.
Welcome back. It's turning out to be a good, steady afternoon of trade. No complaints there. The Nifty is cruising along 150 points higher. Mid-cap index also doing pretty well. And even the Bank Nifty, a shade below the Nifty, but again, it's tracking gains of about 0.3%. Now, it's a pretty busy week for the primary market as well, because 2 IPOs have opened out for subscriptions today. There's chemical storage and logistics firm AG's Vopak Terminals, which has come out with a 2,800 crore rupee issue. And this is, entirely fresh money that's going to go towards the company. Then there is also Schloss Bangalore, which runs the popular Leela chain of hotels. And this is a 3,500 crore issue. Some of it is an OFS and 2,500 crores is the actual money being raised by the company. Let's listen in to what both of these managements had to say about their issues and about the company prospects.
Two liquid terminals have just become operational in March, which is a JNP in Newport, as well as Mangalore expansion. And then two cryogenic terminals at Mangalore and Pipavav are getting commissioned in H1 of the current year. So they are like factories. I have 22 working sites. I've developed 225 acres of port land in 6 ports. And these are going to triple my LPG capacity, the two cryogenic which is going to come. The terminal is capable to do 6 million tons of throughput. Okay. My rate of revenue is 1,250 rupees. I have spent only 900 odd crores for that terminal. Now, as the utilization will ramp up in 5-7 years, I would be reaching that peak. Okay. So you take your take that what a potential that terminal has, because I will not be able to step into that forward.
Proceeds of the IPO, about 2,500 crores, which is the primary issuance. A majority of that capital will be used to reduce leverage or debt on the company's balance sheets. As of March 25, the company had cash of about 1,200 crores on its balance sheet. So post-IPO, the net debt position of the company, gross debt minus cash, will be close to zero. Firstly, the focus of the business is on luxury. Now, in the hotel business, a large part of your expenses are fixed in nature, which means if you can command pricing premium and if you can invest back in your real estate or your property business with lower fixed heads, which can be sustained, that contributes to your current margin.
Well, interesting conversations from those that are raising some money from the equity markets. For the time being, though, it's around 3 p.m. Nimesh joins us to tell us what he's picking up on D Street Charter. Well, Nimesh, I think participation could be relatively lower because US markets, UK markets are shut. But what are your sense on the flows?
Well, decent outcome, Nigel, given that there was a marginal disappointment in terms of the RBI dividend. Yeah. Remember, on Friday, we rallied pretty hard in anticipation of a very large number. That didn't turn out to be, and even then, the Nifty is up, buzzing in trade. And I guess, the biggest story is the broader markets. Look at the kind of stocks which are rallying in the broader market names. Various themes are now getting played out. The pipes theme, the insurance theme. Those themes are now getting attention from the investors. So clearly, it's a market where the broader markets are relatively outperforming. That's been the trend today as well. What on the flows? It's quite mixed and not great either on the buy side or on the sell side. So it's relatively muted, is what I understand from a larger institutional activity point of view. As I said, it's largely the mid caps and to some extent. It's also helped by very strong numbers. For a lot of the companies have reported better than what Street was anticipating in Q4 for the broader market companies. So that's also helping at the margin for them to outperform. We have an expiry this week, so it'll be a bit volatile over the next couple of days. But broadly today, on the Nifty, there is not much participation. And the broader market outperformance continue.
All right, but there's obviously a few stocks that you have picked up with some news in focus. So tell us which are them.
Right. So in terms of the individual stocks, the first is the theme on the block deals. I track very closely that. So I understand there are going to be large blocks in few names. One is ITC Hotels, PG Electro Plus, and Angel One. So expect large blocks in these 3 names. In fact, PG and Angel One both are under pressure today. The second name is Apollo Pipes. I spoke about pipes as a theme doing good. Apollo Pipes was up 20% on Friday. It's buzzing in trade on large volumes in today's market as well. And I understand a large HNI investor was an active buyer in the last couple of days. So entire pipe theme seems to be doing good. Astral, Supreme, and so for that matter, Apollo Pipes as well. The third stock is Max Financials. Within the insurance name, this one stock which has relatively outperformed post the earnings as well. Again, I understand there are very strong buy bids from large institutions, and one long-only FI has been an active buyer in Max Financial. That's the reason why we've seen a relative outperformance within the insurance pack. And the last is Balkrishna Industries. We spoke extensively about weak numbers and the capex that companies foraying into, but there are aggressive sell-offs as well from large institutions in Balkrishna Industries.
So, yeah, no, absolutely. Nimesh, lots of blocks, right? And that first one was ITC Hotels, right?
Yeah, that's right.
That you mentioned. So, and here, Are we looking at some more promoter selling stake? I mean, any idea?
Prashant, it's basically a strategic investor who's going to sell stake in ITC Hotels. Remember, post the demerger, there was an equal shareholding, right? So that entity owns close to 15% stake, and it's a non-core asset for them. So they have actually disclosed, last quarter as well, that they will eventually sell that stake. So it looks like that large block is coming in ITC Hotels. But interestingly, I understand a very large influential investor, HNI investor, has shown some sort of an interest in that block. So very interesting as to how much they sell and who's the large investor who buys in. But for ITC Hotels, the buzz is that it could be a large block deal coming very soon.
Okay, all right.
I hope I gave enough hint on who the seller is and potentially who the buyer is.
Yeah, without naming.
Without naming, and rest let the market gossip and predict.
So Nimesh has given us the likely seller and the counterparty also.
Yes.
But counterparty, we'll see as it comes. Nimesh, thank you very much for that. So that is ITC Hotels, but that's one among a few companies where there are blocks which are expected. Now, let's go back to Rahul, who's with us with what he'd want you to buy or sell today for a reverse trade. We'll come back tomorrow. Rahul, good afternoon. What do you have? Rahul, I think you're on mute. You'll have to unmute yourself, please.
Yeah, beg your pardon. So Bharti Airtel is a trade that can be looked upon for BTST. The stock has seen a sizable build-up in the open interest on the future side. Plus, the stock is also technically looking very robust. One can also look to buy the call options of 1860 strike price around the 43.45 price. Have a stop loss placed at 36 and about 60.65 is a possible target in the same. So Bharti Airtel looks pretty solid for a BTST trade.
Thank you very much for that. Let's talk about BEML. That's surging after reporting the Q4 numbers. Ria joins in with the details. Ria.
Well, yes, BEML has been trading higher in today's session on the back of very strong commentary from the management. They've said that they're expecting a 20% revenue growth in FY26 with rail and defense orders firing up in this year. In terms of revenue contribution, rail and defense are expected to contribute to over 60% of the revenues in FY26, while mining will account for the remaining 40%. They're also eyeing an order book of around rupees 22,000 crores by the end of this year, which will be an increase of over 50% from the current levels. Margins are also expected to expand by around 150 basis points to 14.5% in the next fiscal. Now, on the defense front, here's where the commentary has been quite positive. They're optimistic about landing some large defense procurement orders, particularly in the land system platform segment. Now, overall defense is expected to contribute to over 20% of the FY26 order book, with the revenue contribution from the segment going up to 30% from the current 27% levels. They've also said that they're diversifying into the maritime and aerospace segment as well. And while the aerospace order book contributions will reflect in FY26, the execution for this will start in FY27. So overall, the outlook remains quite positive. The stock is up over 13% on the back of this. And this is despite the fact that the company has missed their FY25 revenue and order book guidance.
All right, got that. Thanks very much for that, Ria. Well, earlier we did speak with the CMD of the company, Shantanu Roy, on BEML's revenue and order book estimates for FY26, both of which are looking better than what the company delivered in FY25. Take a look.
Order book, as far as the current scenario, what it looks like, with some spillover orders in the rail and metro. So the current order book of 14,600 crores as of 31st March, we should be hoping to double it in the current financial year. Again, it will be led by rail and metro. 60% contribution will come from the rail and metro. A lot of metro projects which we have already bid for, it will be decided in the current financial year. Some of the rail projects also, like the track machines and all, which we have already bid for, it will be decided in the current financial year. And 20% each from defense and from mining. That is what it looks like currently. I said doubling it. So doubling it should be around 28,000, and from 28,000, we'll be executing some as well. So we should end up the year at around 22,000.
Let's move on and talk about Camlin Fine. That's in focus. Lots of brokerages are writing on this company. Upasna joins in.
Certainly, Rima. Well, the company has reported a strong set of numbers in FY25, and the stock is also up 35% this month. Now, coming to the brokerages, Incred has given a buy rating with the target price as high as 428 per share. It says that the company is one of the largest suppliers of catechol to Chinese markets. However, with increasing captive consumption, its exports have declined, contributing to rising catechol prices globally. As a result, vanillin RM cost in China expected to increase further. Now, brokerages also reiterated that with the marginal cost of supply in 70% of the global market now at minimum $23 per kg, India's vanillin export prices are likely to rise at least by $20 per kg by H2 FY26 is what they have highlighted. Now, Phillip Capital has also given a buy rating with a target price of 255 per share. It says that the company has seen a turnaround in its core earnings in FY25, led by sustained strong performance in company's blended business, ramp up in vanillin operations, and also closure of its loss-making Italy and Chinese plant, which has led to this growth. Now, going ahead, it expects the company to deliver a strong, profitable growth ahead and a good performance as well, led by various factors such as elimination of companies' hidden losses in its Europe and China plant, as highlighted earlier. Also, volume and value benefits will kick in as vanillin operations will be led due to anti-dumping duty on China by both US and Europe, and also integration of two strategic blended business acquisitions by the company. All these factors will lead to a strong profitable growth is what the Phillip Capital has highlighted. It has also raised its FY26 EBITDA estimates by 7% and FY27 EBITDA estimates by 3% respectively. So all in all, a strong commentary from brokerages, and we can clearly see the stock surging in trade today.
Okay, all right. Thanks a lot for that, Upasana. It's been a while since I saw Camlin spike up in that manner, but thanks for giving us that detail. Pipe stocks, they're in focus. Astral, Supreme, Prince Pipes, Finolex, all of them are gaining in trade. After a while, after a few months of soft resin, PVC resin prices, we have seen prices move up. Ria joins us to tell us why. Ria?
Well, yes, pipe companies have been buzzing in trade today, and this is largely due to the fact that PVC resin prices have reversed after 5 consecutive months. Now, as per PL, this reversal in PVC resin prices is positive for plastic pipe players like Astral, Supreme Industries, Prince Pipes, and Finolex Industries as well. What they've said is that the sustained price correction has led to a sharp reduction in channel inventory levels, and with this price reversal now, plastic pipe distributors and channel partners are expected to begin restocking, and the normalization of channel inventory is expected to lead to a growth of around 8 to 8.5% for the industry in FY26. They've also said that larger players are expected to gain market share and also achieve or even exceed their volume growth guidance for FY26. So on the back of this, all of these companies have been trading higher in today's session despite posting a weak set of numbers for Q4. But in terms of valuations, all of these companies are trading below their 3-year average PEs. And if you look at the stock prices as well, for Finolex, Supreme and Astral, all of these are down around 38% off their respective 52-week highs, and even Prince Pipes and High-Tech Pipes are down around 54% off their 52-week highs.
All right, okay, got it, Ria. Thank you very much for that. We have Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, now joining in. Sudeep, thanks very much for being with us. Good to have you on. So let's actually talk about some of these pipe companies, Astral, Finolex and the likes. What's your sense with this change in the resin pricing now? What's the outlook? Do you like any of these stocks to begin with?
Well, I think, Surabhi, it's an interesting opportunity for some of these players. And, definitely, I think restocking is a reality, and that will happen, which will benefit pretty much all these players, particularly the more established players. But looking at the valuation, I think Prince Pipes does look good to me because you have to also factor in the valuation at which they are quoting. Well, Astral is a fantastic company, but the valuation is rich. So if I am a little, prone to, willing to take a little bit more risk, I think I'll go for Prince Pipes at this stage.
You had a look at Balkrishna's numbers. Street is disappointed. The stock is down 6%. What next for the company?
Well, I think numbers were definitely disappointing, and I think the market price correction is on account of that. But I think there is one bit of a silver lining because raw material prices are coming down, and the way things are poised, I think the cost coming down will help them improve their margins going forward. But having said that, I think this trade war and tariff issue will affect Balakrishna one way or the other. So we'll have to it's better to wait and watch how this entire tariff thing settles before I will recommend position or buying into Balakrishna even at current levels.
All right, that's Balakrishna. Definitely, it's been one of the result disappointments of the day. We'll take a very quick break on that note. Come back. We'll have more on the markets for you in just a bit.
Welcome back. Well, the broader markets continue to hold with good gains, and the Nifty is up around 150 points. Sudeep Bandyopadhyay is still with us. Sudeep, I wanted to ask you about Camlin Fine. You know, Upasana just joined us and explained to us why the street is now optimistic on prospects and why a couple of brokerages as well believe that, you know, the part of their business that was making losses, in fact, that material will be used in-house, and that's where things could turn around. Any view on Camlin Fine? So the other one I'm looking at is Subros. It came out with a set of numbers last week, and the stock is now up close to around 10%. Your view on any of these two?
Well, I think Camlin definitely deserves attention. I think, a lot of interesting things are happening in this entire space. And I think the opportunity size for them is growing. They were already well entrenched in China, and yes, the use of the loss-making part of the material in the in-house consumption definitely gives them an edge, and margin improvement is a distinct possibility. So yes, I think significant value appreciation possible. Also, the valuations are not that rich. If you compare with many other segments of this same industry. So I think it is definitely worthwhile looking at Camlin. As far as Subros is concerned, while performance was interesting and definitely worth looking at, the challenge to me remains the entire tariff issue. So the global OEMs and their acquisition going forward will, to an extent, definitely depend on how the tariff thing settles. So I'll be a bit cautious. Performance was undoubtedly good, and the price also has moved up consequent upon that.
Sudeep, Dream Folks, it's trading well below its issue price of 326. It was providing a lot of services when you're traveling at the airports. Now they've diversified into highways. The stock is down nearly 4-5% post-earnings. Is it a company you've looked at?
I did look, and I don't think I will recommend a buy. I think the valuation was rich to begin with. And, to justify that kind of valuation, performance has to move up significantly. I'm not saying the business model is not good. Business model is good. And definitely there is scope for significant scale up. And pretty much that's what they're trying to do by diversifying out of airport premises. That's the right thing to do. But I think it'll take time before, the fundamentals catch up with the valuation.
Okay. Gillette, GNFC, Transrail Lighting, RateGain, Kolte Patil, all up 5, 6, 7% on the back of Q4 numbers. Any of these on your watch list where you'd recommend a buy?
Well, I was very positive on RateGain for quite some time. Then, of course, the company disappointed by continuously lowering the guidelines. Guidance actually, and they were at 20. From there they came to 15, and finally around 12. Of course, finally they have met the revised guidance, and that's good. I think fundamentally the business has potential to grow significantly. Travel and tourism is one segment which is definitely booming, and they cater to this segment. So opportunity is significant. They grew through acquisition last year. Right now they have a lot of cash in the books, but no acquisition has come. So we'll wait for how things move in the near future. But if you have a little long-term view, I think RateGain is definitely a good hold or a good buy even at current levels.
And finally, Sudeep, in some senses, I guess the stock of the day, BEML. I think looking at the Q4 numbers, nobody would have imagined it'll end up 15% higher. I'm not quite sure. But the commentary was fine, and they're talking about obviously a better execution, better revenue growth, and a bigger order book as well by the end of FY26. But your thoughts?
Well, I think the commentary was pretty good. And I think what is interesting is now about 60% of their business is coming from metro rail and rail segments. and 20 and 20 each from defense and mining. So yes, defense also is an interesting area, but I think the work they're doing in metro, execution is key. And if execution improves, I don't think there'll be a dearth of orders. So the management is talking sense. There's absolutely no problem in them getting order. We'll have to wait and watch the execution. You know, I still remember BHEL, how they used to continuously get orders and performance used to disappoint. Execution used to disappoint the market time and again. Then subsequently in the last few quarters, they have started performing well on the execution front. We'll have to wait and watch how BEML does on the execution front going forward. I am positive on the stock, but I don't think I will buy or recommend a buy still.
You know, there is a stock, Sudeep, called Concord and Enviro Systems. Have you? I don't know if you tracked it. It's a fairly recent listing. Water treatment.
No, I haven't, Prashant, but I think water treatment is an interesting area.
Very small company, 1,200 crore market cap. Numbers have been good. Actually, last quarter was a disaster. This quarter has been good. B2B in terms of water doesn't deal with the government or multilateral institutions, etc., like VATech does. Anyway, I mean, it's one of those stocks which has done well since listing at all. But as I said, it's very, very small. So keep that in mind. 145 points, by the way, on the Nifty is what you have. There's about 2 minutes to go for close. And it's a pretty good session all told this Monday. So many individual bottom-up names which did quite well. It's not like, one or two sectors. It's really from everywhere. And in that sense, all were called. Cosmo first, I mean, oh boy, what a move it has seen. And it's an absolute disaster. It used to be, at least till about 6-7 days back, an absolute disaster over a long period of time, that is, by the way. But from under 600, it's now it's leaped above 1,000 rupees, 1,050 nearly on Cosmo first, very, very quickly. So that's come up with humongous gains, but so many others. Shilpa Medicare, for example, I think about 5-6 days back was about 600. Stocks are almost 900 rupees now. Of course, there was news flow with regards to Shilpa, which Ekta highlighted on Friday. So there is that. NetWeb is up 6%. We had Nilesh Shah with us on Editors Roundtable on Friday, who was talking about this one. Again, I mean, the recent low was about 1,250, 1,900 now on NetWeb. ITT Cementation, which of course now I think is, there was a Adani open offer, which I think is now come up. Low was about 500 recently, stocks back above 700. I could go on with many of these names. Vaibhav Global, by the way, is another one. Again, we discussed this on Editors Roundtable on Friday. Stock, by the way, up 8% after a while. Big volumes as well on this one. So it's a pretty good-looking screen, all told, overall, as far as broader markets are concerned. Sudeep will, of course, stay with us and take you through what to watch out for on Markets Forward. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Markets Forward picks up the action in just a bit.